Well, folks, we have a busy week coming up for the stock market this week, and this video is going to be pretty dang long. Let's just dive into it. We're going to talk about stocks in this video, 10 that I'm looking at, all of which are reporting earnings. We're going to break down some numbers in this video. We're also going to go over what you have to watch out for from consumer confidence, which is coming out on Tuesday, core PCE data. We're going to talk about the preliminary GDP data coming out. So we have a bunch to talk about. Sit back, relax, hit that like button, subscribe, take a sip of your coffee, guys. I appreciate you all as always, and let's just dive into the video. So the markets, as you all know, have been all over the place, right? Well, we've been trending in the upwards direction, but the past couple of weeks, well, maybe not the past couple of weeks, but really the past 10 days to about 2 weeks, I guess, we've been pretty choppy, moving, sideways on SPY here from about, I'd argue, well, you can't argue, it's right here, from 390 to about 400, 403, triple Q in the same time period, has been coasting between roughly $280 a share to about 290, 295. You guys can pretty much see that right here on the 20-day chart, right? And what we're noticing, if I pull up SPY as we're getting into this week, which again, we have a lot going on this week, guys, a lot. We're noticing we have an ascending triangle on SPY, which means simply, we're making higher lows, but at the same time, there's a point of resistance where we've been kind of failing at, and we've been squeezing deeper and deeper into it, hence the triangle. And that here in this case on SPY is at 405 roughly dollars per share. You guys can see it here on the 20-day chart. You could also see it if I pull up the 4-hour chart. You guys notice we're kind of digging deeper and deeper into that 405. I mean we closed at 402 on the last day of trading, right? So if we break out of 405 this week, this could really start gearing up towards 410, 415, which is that high from the middle of September, which you guys know I've talked about that a lot on the channel. That is where this ended up dumping after we got the August CPI data, which came in higher than expected, which you guys probably remember that. And on triple Q, if I pull up this 4-hour chart, you guys can see we're not really in an ascending triangle, but we're in a wedge. You guys can see that we're clearly in a wedge. We're making higher lows, but also lower highs. Like I outlined in my last video, we just put in a lower high here on Friday, right? Here we failed at about 290. The previous high was about 294. So what's triple Q going to do this week? I mean, are we going to take out the high from Friday, break 291, start breaking the wedge towards the mid 290s, or is this going to dump under 283, ultimately 280, which is the low from last week? And then, that'd be the wedge, the bottom of the wedge breaking, and bears are really going to gain momentum at that point. So it's really just a waiting game at this point. And let me tell you, the market is getting everything thrown at it this week. Starting on Tuesday, we have the consumer confidence, which is coming out at 10 a.m. Pretty much this is a survey of about 3,000 households, which asks respondents to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. And on Tuesday, or rather this is on Wednesday, we have the preliminary GDP number, which is coming out at 8:30 a.m. And if you guys didn't know, we get 3 versions of the GDP. We got the other one. When was that? About a month ago, I think, a couple weeks ago. We got the, the advanced, right? So it goes advanced, preliminary, then we have the final GDP number and the advanced, which is the earliest. We got that a couple weeks ago. This is usually the one that holds the most weight. And then we have Powell on Wednesday speaking right after, not right after, but the day of the preliminary GDP number, a couple hours after it comes out, and he's due to speak about, of course, the economic outlook, inflation, the labor market, interest rates, I'm sure, are going to get touched upon, right? So we're going to get a lot, and this is at the Brookings Institution in Washington, D.C. Again, that's at 1:30 p.m. on Wednesday. That is Eastern Standard Time. And then there's more. Wait, there's more, guys. It's not just that. We have core PC on Thursday. We have the ISM manufacturing on Thursday as well. And then on Friday, there's even more. We have the average hourly earnings month over month coming out. We have the non-farm employment change and the unemployment rate. All of these numbers are coming out on Friday. So, I mean, this week is literally jam-packed with catalysts that could move the markets up or down. And on top of that, we have all these earnings that are coming out, which we're going to get into here in a couple of minutes. So, unfreaking believable, guys. Big week coming up, so you're going to want to subscribe to the channel because we're going to talk about all this stuff all throughout the week. We're going to cover it, and we're going to talk about how the markets are actually reacting to this stuff. So make sure to subscribe, and while you're at it, hit that like button, and you might as well get some free money from Moomoo and from Webull if you haven't done so already. 15 stocks from Moomoo plus a $10 cash coupon, and you could also get 12 stocks from Webull with any amount deposited. All the details are linked right down below, guys. And now let's just get into these stocks. Let's talk stocks. And while you're at it, hit the like button, do all that good stuff as well. Let's talk about Snowflake. We have Snowflake reporting this week, which is going to be the first of a bunch that we're going to get into in this video. So Snowflake, let me pull the chart up before we actually get into these numbers. And mind you, all these numbers we're going to mention in this video, guys, they are all estimates, right? These are not for sure going to be the numbers. These are all estimates from the sources. Yahoo Finance, I believe. Yeah, Yahoo Finance is where I got all these numbers, right? So cheers to that. We're gonna get into this. Let me actually get a little sip of this coffee, guys. So right off the bat, we're noticing that Snowflake has not been doing well. I mean, you guys know that. The stock in just the past couple of weeks is down from almost $200 a share. I mean, at one point we actually double topped at about 200. You guys can see that right here. If I pull it up, you can see 1, 2, boom, boom, we double top there. And now from that point, we're down to about $144. So just in a couple of weeks, we're down about 30%. In a couple of months, we're down about 40%. A couple months ago, this stock was in the mid 200s. So Snowflake is down a ton, right? So we have earnings coming up this week, and this is going to be interesting to see how these end up looking. We have them coming up here on the 30th after the bell, which is on, I believe, what is that? Is that on Wednesday? Yeah, I think that's on Wednesday, right? Yeah, 30th is on Wednesday. So they're after the bell. They're looking to do 4 cents in earnings per share. And if we look here at their recent earnings, I mean, they've been in the red for EPS. 2 quarters ago, they lost 53 cents. The quarter after that, they lost 70 cents. Let me see if you guys can see that. Yep, there we go. If I make my face a little bit smaller, you can see it. Again, they lost 70 cents last quarter. Now they're projected to make 4 cents on the quarter. That's the average estimate. And revenue, the average estimate is $539 million, which would be up 61% year over year. And I believe, I'm not too sure if Buffett still owns the stock. I'm sure he owns a little bit of it. I'm not too sure. I have to go look at their holdings right now. But this is one that he was buying, months, or not even months ago, about 2 years ago. When was that? During the whole craze when it went IPO, I believe. He bought, or did he already own it heading into IPO? I forget exactly the details, guys, but I'm going to see if he actually still owns it. I think he does a little bit. I don't know if he sold any. But yeah, Snowflake is one that I'm very interested in, not really buying for a long-term investment, but as a trade, potentially. If it starts making higher lows out of these moving averages on the 4-hour, that'd be grounds for me to potentially play it, right? And a lot of these stocks, pretty much all of these that we're talking about today, are going to be for swing trades, short-term trades, and we're going to talk more about it. So stick on throughout the video, guys. So the next one is CRM, which is known as Salesforce. Yeah, you guys know Salesforce, right? You probably use it maybe on a day-to-day basis, depending on what you do for a living. Salesforce is a stock that has also been destroyed. I mean, this thing is down 30% from the recent highs a couple months ago. That was back in the beginning of the year, more beginning, middle, March, April, roughly. It was at $220 a share. Now it's sitting pretty at about $155 a share. Again, down 30%. So they're looking to do EPS of $1.21 on revenue average, revenue estimate of $9.42 billion, which would be up about 14% year over year. So not crazy growth, but respectable. If they do about 7.8 bill, which again is up 14% year over year. So the chart here looks like we are trying to make some sort of move out of these moving averages, but guys, this does not look that great. I mean, it looks like the head and shoulders played out. You guys can see that here pretty much clear as day. We are trying to make a move out of these moving averages, but CRM still faced with a big resistance coming up from the end, or when was that? The end of, September, early October, about 156, $7. So I'm not playing it until it breaks that. I mean, if it does break that point, 157, we could maybe fill the gap to about 165-ish. That'd be a point where I'd be looking at it. So for me, guys, I'm going to be putting my alert on CRM at 158. Let's put it right there. Mark is at or above 158. If that point breaks, again, we could be making that move towards that mid 160 mark, which is where I'd be looking at it. Then if that were to break, all right, maybe we're talking about a legitimate reversal for CRM. But for now, guys, and you can see here a couple weeks ago, in the middle of about 2 months ago, middle of September, we also failed at about $165. So keep that in mind. That's where it probably will go if it's able to break 158. So earnings are coming out on the, let's see, the 30th, I believe. Yeah, 30th, which is on Wednesday after the bell. So another one that I want to talk to you guys about is Dollar General, ticker symbol DG. Let's pull that up and make sure you guys can see it. There we go. This is one that you can see clearly. I had an ascending triangle drawn out a couple weeks ago. Did not play out. And quite frankly, if we look at this chart, it looks like you could argue we're still in an ascending triangle. And, that resistance, man, at 265 is prominent. Look at that. That is a big resistance. And yeah, I mean, look, this is an ascending triangle. So if Dollar General is able to break out of 260, 265, there could be a legitimate breakout, a huge leg up coming on this stock. And this is one that's also, let me see, it's at all-time highs. It's in a stealth bull market. This is one that if I pull up the 4-hour chart, we're in a recession, right? Yeah, we are, no matter what Washington says or whatever. And this is at pretty much all-time highs. It's crazy, right? And, at this point, it could go even higher if 260, 265 breaks. So EPS is looking to be $2.59 or 53 cents rather for Dollar General on revenue of what? What is that? I could barely even see. I need to get my glasses, guys. Hold on a second. I'm a friggin' old man here. $9.42 billion, up 10.6% year over year. So not bad. 10% year over year revenue growth for Dollar General. That's if that's what they end up doing, about $9.4 billion. And, we'll see. We'll see what happens. And again, that 265 level, I'm telling you, is a big point that you have to watch. I'm watching it. You guys probably should watch it as well. Not because I'm some genius or, some trading god. I'm not. But, I'm just saying it's a big point from a couple months ago. It's been a big point for months at this point. So that's Dollar General. ChargePoint is another one. CHPT, let's pull it up. ChargePoint is one that, it broke trend a few weeks ago. You guys can see that. We actually called that out. It broke trend at about $15, and now it's, $12? I mean, it's down about 21%. So it's in a bear market since we drew out that chart and called out that point. So clearly bears came in, and Bears are still in charge. I mean, we're still seeing a death cross here. We're under both moving averages, but with earnings coming up on the 1st of December, which is on Thursday, who knows? Are things going to turn around? I mean, they're looking to do 19 cents in the red, so they're going to lose money, but revenue is going to come in at $132 million estimated, which would be up 100%, which is unbelievable year over year. So they're looking to do insane revenue numbers, but it looks like the stock is slowly slipping. Investors are losing some confidence here. It's down 40% in just the past 80 days. And this is one that, of course, is driven by politics as well. I mean, of course, Democrats, they want more, green energy. They're pushing electric vehicles, right? So, of course, if the government's being dominated by the Democrats, that's better for companies like ChargePoint. That's better for companies like Tesla. That's better for companies like Blink, which these are, all in the electric vehicle space. Any electric vehicle company, really, you can make the argument, but if we have a split government, Republicans are in, right? That's going to be better, worse, worse for these types of companies, right? So with the midterms and everything going on politically recently, that has to have had a downwards impact on ChargePoint, at least in my opinion, right? And that's for sure what I believe. And for that reason, with everything that's going on, I'm staying away from it in the short term. But if it's able to prove me wrong with earnings, maybe we start breaking out of, let's say, 12.50, 13, 14 bucks. Really, it's going to have to start breaking 14 bucks. Maybe at that point, I'd consider trading it. But for now, ChargePoint is one that I'm just watching for earnings. I'll set my alert at 14 bucks, and we'll see what it ends up doing here moving forward. So what do you guys think about these stocks? We have a bunch more to talk about, but these are a couple that that I think are going to be very important coming up. So I'd love to know your thoughts in the comments down below as always. So Ulta is another one. Let's pull that up. Ticker symbol ULTA. Ulta is, of course, a makeup company, right? A makeup retailer. They have a bunch of different brands under their belt. I don't know if I think they have their own products, of course. I mean, they have to have their own products. And this is another one that's been in a stealth bull market. I mean, this is unbelievable. Ulta right now is at $450 a share, and the all-time high for this company is, well, $450 a share. We're at all-time highs. I mean, this is unbelievable. Dollar General, Ulta, BJ's Wholesale Club. I mean, these are companies that have been crushing it, and the stocks are on fire. I mean, it's just, you cannot deny it. And at this point, we have earnings coming up, which I'm not going to lie, they're on the first, which that's not what I'm not going to lie about. But what I am not going to lie about is the fact that we're up about 20% heading into earnings. In just the past month, Ulta's up 20%. So keep that in mind. I mean, this is kind of priced to perfection. We're at all-time highs. If these earnings disappoint, it could drop. Keep that in mind. It's set up for a potential drop. But if earnings blow it out of the water, guidance is strong, man, could this go to all-time highs again? I mean, we just hit all-time highs, but it could go even higher, maybe 470, 475. Who knows where it could be going? So let me actually get a little water, guys. Cheers to all you guys out there watching. We're not going to edit this video. We're going to do it all in one take. And even if that means, I lose my voice halfway throughout the video. So Ulta is one that I'm watching. They're looking to do $4.12 in EPS on revenue of $2.2 billion, which is up 10%. Not too bad for Ulta. So watch out for that. PDD is another one. This is a Chinese company, so keep that in mind. But PDD is another one that I'm looking at. It's kind of trading in this channel. It has been over the course of the year. You guys can see that clear as day. And now in the past couple of days, we've been selling off a little bit, down about 9.4%. So they're looking to do EPS of 65 cents on revenue of $4.32 billion, which would be up 45% year over year. So PDD is actually a pretty nice growing company out of China. And of course, there is added risk because it is a Chinese company. So keep that in mind. But overall, it looks like it's trading in this channel. And you could argue, hey, if it breaks out of 75 bucks, there could be a lot more upside looking at this 3-year chart, which that's a pretty good argument. I might as well set my alert at 75 bucks and we'll see what it does from that point. So the next stock is Bilibili, another foreign company here. Let's pull it up and you guys can see it has been destroyed. 157 bucks is where it was back in the peak, in the bubble, February 21. It is down 92% from that point, which is just mind-boggling. And you all can see here on the 4-hour chart, it's just been destroyed. In the past couple of weeks, it's down 2 weeks, not even 2 weeks, it's down 30%. So we have earnings coming up here for Billy on the 29th, which I believe is on, is that Tuesday? Yeah, that's on Tuesday or Wednesday, whatever day that is, whatever day it is. They're on the 29th, and they're looking to do 65 cents in the red of EPS, so they're losing money on revenue of $798 million, which would be up about 10% roughly year over year. So growth has really slowed down for Bilibili. Stock's down 90%. Man, it is not looking pretty. They're going to need some piece of news to drag them out of the gutter. Maybe it's these earnings coming up. So we have CrowdStrike as well this week. Let me pull that up and take a look at what's going on. CrowdStrike is another one that's not been doing well. It is down about 45% in the past couple of months. They have earnings coming out here on the 30th, I believe. 29th, on the 29th after the bell. So they're looking to do 31 cents in earnings per share on revenue of $573 million, which would be up 51% year over year, which is pretty dang good, guys. 50% growth for CrowdStrike, but just because they're growing doesn't mean the stock is going to be growing as well. And that's a lesson that a lot of people have learned, right? growth stocks, especially growth stocks, they can price in a lot of the future growth way too soon. We saw that with Tesla. You could argue that happened here with CrowdStrike. Maybe not as bad as some other companies, but a lot of these growth companies, a lot of hype gets involved and they run way too quickly. And then you get the question, a lot of people get the question, why the heck did this company, why did the stock run up so much? And then the stock was flat for 10 years, even though the company kept growing year over year. Well, it's because a lot of people got way too excited, way too soon, priced in all that growth way too quickly. And then the next 5-10 years, the stock slowly creeps down or it's flat, even though the company's still growing, right? You guys know what I mean. That happens a lot. And, we've seen that happen a lot recently during, the bear market that we've been in. And who knows how much longer we have in this bear market. So 31 cents EPS is what they're estimating on revenue of 57 or 570 million. So, up 50% year over year. We have another company that I want to talk about, which is Five Below. They're reporting on, let me see here. Five Below's on the 30th, which I believe is on Wednesday. So they're looking to do EPS of 14 cents on revenue of $611 million, which would be up about 0.6% year over year. So don't expect anything too fancy out of Five Below, guys. They're looking to be flat pretty much on revenue year over year. But the stock, believe it or not, I'm not saying this is the bottom, but as of now, the stock bottomed out at $109, and that was back in July, and it's actually been ripping ever since July. It's up about 45% since July, and we're clearly above the moving averages. And last week, the bulls, or maybe the week before, bulls really came through as they plowed right through $150, which you guys can see that was the resistance from the middle of August. So bulls really came in clutch there. They broke right through, and now we're continuously week after week breaking highs on Five Below, which is great. And, we have earnings coming up. Let's see. This is one that I could see, running even more if earnings are strong, maybe towards that 180, 185 level where it was a couple of months ago. You guys can see that here on the 4-hour time frame. That was back in the middle end of April where it was $185, and just in 2 months, this stock got obliterated. Went from 185 to 109. That was a 40% drop in about 2 months, a little bit over 2 months. So Five Below, I'm watching very closely, and I don't even know how many stocks. That was probably the 10th stock. So these are going to be bonus ones. If you guys stuck till the end, I appreciate you all. As always, let me know in the comments that you stuck till the end. And again, I appreciate you guys as always. So Intuit, we have this week as well. Let me see here. 29th? Yeah, 29th after the bell. We have Intuit reporting, and that is going to be a company that I'm watching. They're looking to do EPS of $1.22 on a revenue of $2.5 billion, which would be up about 24% year over year. So Intuit, you guys got to watch it. And the chart, like a lot of these, does not look good, no doubt. The chart does not look good. It's been killed. It's down about 19% in the past couple of months, but I'm still watching it with earnings coming out and revenue expected to be up about 25% year over year. And another Chinese company, almost forgot to mention, guys, another Chinese company that I'm watching is XPeng, ticker symbol XPEV. This is one that's just been destroyed. Talk about electric vehicle stocks that have been destroyed. This is one that you got to look at. It is down 80% in the past half year, pretty much 155 days, and they have earnings coming up, I believe, on Wednesday or Tuesday. Let me see. They're on Wednesday, right? So imagine that, 80%. This is, destroyed heading into these earnings. So they're looking to lose money again, negative 36 cents on revenue of $1.01 billion, which would be up 27% year over year. So we'll see, guys. And to me, again, there's a lot of players in this EV space, especially in China. I'm not really looking to take part of it. I have a little bit of NIO. I still own some NIO. I have a little bit of Tesla. But other than that, these, Chinese EV players, I'm not going to lie. Other than NIO, I'm not looking to really mess with them, especially because Tesla has exposure in China. Well, maybe BYD is one that I'd look at. BYD is a big competitor to Tesla. Do not sleep on BYD, guys. Their numbers are pretty impressive. But other than those three, I'm not really seriously looking at any other players, at least out of China. And that's just me. But again, since they're reporting earnings, that's why we're covering XPEV. And, that's why we talk about some of the other ones when there's big events coming out. So with that being said, guys, we're about 25 minutes in. Wow, longer video today. But with that being said, it's over. We're going to wrap the video up. If you enjoyed it, hit the like button, subscribe, get your free stocks from Moomoo. You get $10 plus up to 15 stocks with a $100 deposit, at least a $100 deposit. Those are linked right down below. Each of those stocks could be up to $2,000. And you could also get 12 stocks from Webull with any amount deposited. And don't forget to check out my Patreon if you guys want exclusive content, morning videos, call outs, access to me throughout the day. All of that's on Patreon, link down below. And with that being said, I'll catch you guys in the next video. Thanks for watching as always. Peace out.